Welcome back to the channel. Today I'm starting a new series that I'm going to call a 5-minute Wednesday. So typically midweek, Tuesday or Wednesday, I'm going to film a 4-5-minute quick update on the markets containing an interesting chart, a trade idea, some kind of a distortion that I've noticed or that the research reports that come across my desk want to highlight and that I want you to know about immediately, that I want you to be able to take advantage of on a kind of quick actionable basis, as opposed to my typical deep dives that I film over the weekend. And so today I want to talk about energy market and the energy stocks, because there's something strange happening in that market right now where there's a clear distortion and discrepancy. And obviously you may have noticed oil is much higher. It's a lot more expensive to fill out your car at the gas station. And obviously that's a reflection of the reopening trade, how the economies are coming back from the coronavirus, given the vaccinations all around the world. But when you look at, if you want to follow the energy market in the stock market, you can either obviously follow the individual companies, Exxon, Chevron, or you can look at something like XLE, which is an ETF tracking the energy companies. And so if you look at this chart here, you clearly see on this ETF the outperformance of the sector, January, February, March, and then the 15% pullback that we've had from the March highs. But if you zoom out to a 5-year horizon on this second chart, you see that this ETF is still trading very low to what it used to be at in 2017 and 18 when the economy was, powering at full speed. So now the really interesting thing that I really want to talk about in this video is this other chart from Citibank here, which shows you the correlation between oil, the front contract on the WTI, and this ETF, right? So obviously this ETF is filled with companies from the energy sector, Chevron and Exxon being the largest holders. And typically those two move in sync, right? They move in tandem because obviously, when oil goes higher, energy companies make money. But if you look at this spot here in January, there was a discrepancy where suddenly, oil kept going higher, but the XLE ETF was coming lower and then caught up throughout February and March. And then the same thing is happening right now where you have, oil staying at elevated levels and XLE is much lower than it should be given the historical correlations between oil and the XLE. And so, the idea is, can you take advantage of this? So what is really going to happen with oil going forward, right? If you look at the oil sector and the energy sector, this is a sector that's received the highest amount of upgrades over the last several months from the analyst community on Wall Street. You have the US economy growing 7, 8, or 9% in 2021. And obviously we're heading into the summer where the energy consumption is much higher because of people driving more in the summer and because of air conditioning being used a lot in the US. So oil is going to stay elevated. And, when you look at OPEC Plus, they clearly upped the production. But when you look at the inventory levels, they keep decreasing on a weekly basis. And by the end of the year, in the fourth quarter of 2021, we're still going to be short about 2 million barrels a day. So oil is going to stay elevated or keep going higher in this new energy super cycle, this commodity super cycle that everybody on Wall Street is talking about. And so energy companies, this ETF expressing basically a collection of all these energy companies, should obviously catch up to where oil is today, given these correlations that I showed you on the Citibank chart, and do very well into the second half of this year. Bottom line, if you only take one thing away from this video, oil is going to stay high or keep going higher because of the reopening trade around the world. And energy stocks will catch up into this correlation that we talked about and keep doing well. So put them on a shopping list. If you see a pullback during May, the typical sell in May go away, and you see this XLE trade into the low 40s, or even if you see it below 40, this is a solid buy that you want to own. All right, make sure you give a like to this video, subscribe to the channel, and I'll see you next Wednesday.